Ever daydreamed about suddenly striking it rich and being able to shower your loved ones with gifts?
Oh, absolutely.
We're diving into a Skloff Financial Group article all about how to navigate the tricky waters of gifting and taxes.
Yeah,
So you can be generous with your loved ones, without triggering a tax nightmare.
right.
This article makes a pretty bold claim right out of the gate. It says that you might be able to give away over $1 million without owing a dime in gift tax.
Uh-huh.
So that definitely piqued my interest.
Yeah, no, it's true. And the article does a really good job of kind of laying out the ground rules.
Yeah.
So for starters, like everyone gets this thing called an annual gift exclusion, right?
Right.
It's $18,000 per person in 2024. Think of it as basically like a free pass
Okay.
to give up to that amount to as many people as you want
To as many people.
without having to even like worry about taxes.
So I could give $18,000 to like 100 people and I wouldn't have to worry about it.
Correct. As long as you're under, you stay within that $18,000 per person. You're golden.
That's pretty good.
Yeah.
So if I want to slip a little something extra to my niece and nephew this year,
Uh-huh.
I don't even have to like think twice about the Pax man,
Right.
as long as it's under that $18,000 mark.
You got it.
Yeah.
That's the beauty of this annual exclusion.
That's amazing.
Now, let's say you're feeling, extra generous,
Okay.
like winning the lottery generous.
Right.
That's where this other really great tool comes into play.
Okay.
It's called the Lifetime Gift and Estate Tax Exemption.
Okay.
And for 2024, I think you might be surprised, it's $13.61 million.
$13.61 million. That's enough to buy a small island.
Right.
But are you saying I could like potentially gift that much
Yes.
without any gift tax?
So it's important to note, this is for federal gift tax.
Okay, so like there are other things out there?
Yes, so states can also have their own rules of the road.
Yeah.
We'll unpack those in a little bit.
Okay, yeah, state taxes, I gotcha.
Yeah.
But back to this lifetime exemption for a second. Sure.
What happens if, like, someone, say, a spouse passes away?
Uh-huh.
Does their unused portion just vanish?
So that's where things get really interesting, and this is really important. There's this provision called portability.
Portability.
Portability, and think of it like transferring, like, your unused airline miles
Okay.
to a family member. So with portability, the surviving spouse, they can actually absorb their deceased spouse's unused exemption.
So it's like you're kind of passing on that financial legacy a little bit.
Precisely. And it's one of those things that, often kind of slips under the radar, but it can be a really big deal when you're thinking about estate planning and all of that. But I do want to, I don't want to give you the wrong impression
Okay.
before you get too comfy with this idea of showering everyone with millions of dollars.
Right, right.
There is a little bit of a catch that the article does highlight.
Okay.
So all these great tax benefits we've been talking about, specifically tied to that Tax Cuts and Jobs Act of 2018, right?
Yeah.
They've got a bit of an expiration date.
An expiration date. You're killing me here.
Yeah, so remember that $13.61 million exemption we talked about?
Right.
It's actually projected to shrink dramatically after 2025.
Oh, no.
Yeah, so it could potentially land closer to $6.8 million per person.
Okay, so this tax-free gifting extravaganza is more like a limited time offer.
That's a great way to put it. The article really emphasizes that if you are even considering larger gifts, acting sooner rather than later could really save you a ton of money in taxes.
It makes you think twice about procrastinating on some of those big financial decisions, huh?
Absolutely.
But, okay, so let's say I am ready to be generous today.
Huh?
Does this mean I can just start, like, handing out envelopes of cash?
Not so fast.
Oh, okay.
Because this is where the article gets even juicier. So we've been talking about cash gifts so far.
Right.
Things get a little more interesting when you start gifting other assets. Okay, so we're talking about gifting things other than just cold hard cash. Now we're getting to the good stuff.
Exactly. And that is what we will dive into next.
Okay, so we're talking about gifting things beyond just handing someone a stack of bills. What happens when you want to share the wealth, but that wealth is tied up in, like, stocks or maybe even that beach house you've been holding on to?
Yeah, that's where this whole conversation takes kind of a fascinating turn. Because when you start talking about gifting assets, things like stocks or real estate, instead of just that plain cash, it adds a whole new layer of tax implications.
Okay.
And a lot of it really comes down to this thing called capital gains.
Capital gains. Okay, so just to remind me, because it's been a minute since my last economics class, capital gains is the tax you pay when you sell something for more than you bought it for, right?
Exactly. You got it.
Okay, but how does that work with gifting? Because I'm giving the thing away, right?
Hmm.
So wouldn't the recipient, the person I'm giving it to, wouldn't they be the one selling it later on?
You're thinking about it exactly the right way. It's the recipient's actions that really come into play here. So here's the thing. When you gift an asset, the recipient, they inherit your original cost basis.
Okay, say that again, but maybe a little slower.
Okay, so cost basis, what that means is basically what you originally paid for that asset.
Got it.
So let's say, for example, you bought a stock, ages ago for $10,000.
Okay.
And now that stock is just like skyrocketed in value. It's now worth $100,000.
Amazing. Good for you.
Right. So if you then decide to gift that stock to someone,
Okay.
their cost basis is still that initial $10,000.
Even though they got it at $100,000.
Exactly. Because in the eyes of the IRS, it's like they're stepping into your shoes, tax-wise at least.
So if they were to sell that stock, they would be responsible for the taxes on that like $90,000 gain,
You got it.
even though technically that profit was mine all along.
You're exactly right. Which can seem a little unfair at first glance, I know.
It does.
But don't worry, don't fret just yet, because there are a couple of things that can kind of soften the blow for the lucky recipient.
Okay, I'm all ears. Let's hear about these tax-saving graces.
So first up, remember we talked a little bit earlier about the difference between short-term and long-term capital gains.
Right, vaguely.
If your recipient, if they hold on to that gifted asset for more than a year after they receive it,
Okay.
then they might qualify for those lower, more favorable long-term capital gains rates when they eventually decide to sell.
Oh, okay. So it's like aging a fine wine. The
Mhm.
longer you keep it, the better it gets, at least tax-wise.
You got it, exactly. And here's where things get really interesting. The recipient's own income level,
Okay.
that also plays a really big role in how much they'll actually end up owing on those capital gains.
Really? So someone who has like a lower income might end up paying very little or even no capital gains tax, even on like a massive gain.
You hit the nail on the head. That's exactly right.
Wow.
Which is why, gifting assets to children, for example, folks in lower income tax brackets, it can be a strategic way to kind of like lessen that overall tax burden.
Right.
But of course, you always want to be really mindful of the bigger picture,
Yep.
right? Their financial well-being, all of that.
Right, right. You don't want to just like dump a ton of money on someone who's not ready for it.
Exactly, exactly. So we've got the type of asset, the cost basis, the holding period, the recipient's income. It's like this big, financial puzzle.
Right,
It's not as simple as just like signing over a deed or, a stock certificate.
right.
That's why the article really emphasizes working with a financial advisor who can help you navigate these sometimes choppy waters.
That makes sense.
Yeah, they can really help you kind of craft a gifting strategy that makes sense for your goals, minimizes those tax liabilities.
Speaking of goals, this all makes me wonder, are there any downsides to giving large gifts, even if it seems like a great deal from a tax perspective? That's such a great question, because it's so important to remember, taxes are just one piece of this big, complicated puzzle.
Right, of course.
You're right, there can be other financial considerations, even like emotional ones, things you really need to take into account.
For example, what kind of like downsides are we talking?
Well, for one, when you gift a major asset, like you're saying goodbye to controlling it,
Right.
which is a big thing to consider, especially, what if you think you might need access to those funds down the line?
Right.
You definitely don't want to jeopardize your own financial security in the name of, saving a little on taxes.
That makes sense. Yeah.
Yeah.
You don't want to end up in a tight spot later just because you were trying to be like super generous today.
Exactly. And we can't forget about the potential impact on the recipient too, right?
Yeah.
I mean, coming into like a large sum of money, especially maybe at a younger age, that can be really overwhelming. It's not always a fairy tale ending, you know what I mean? Totally. It's like winning the lottery. Some people, it really messes them up.
Right. It's crucial to make sure that the gift is something that they're actually ready for, something that they can manage responsibly.
So it sounds like even when we're talking about something as positive as giving, it's important to approach it with a certain level of responsibility, a certain amount of thoughtfulness.
100%.
It's not just about like the act of giving the gift, but it's about making sure that the gift is actually going to be beneficial for everyone involved.
Well said. The article does a really great job of highlighting the tax advantages. But just like with any financial decision, it's so crucial to look at the bigger picture.
It's like the article's giving us like the appetizer, but there's a whole buffet of considerations when it comes to estate planning, family dynamics, all of that.
Exactly. And speaking of a larger buffet,
Uh-huh.
remember how we mentioned that this article mainly focuses on those federal taxes?
Uh-huh.
Well, we've got another plate to add to our spread. State regulations.
Oh, right. You mentioned that earlier, that states might have like their own sets of rules about all of this gifting stuff. So even if everything looks good on the federal level, my state might have a totally different opinion.
That's exactly right.
Yeah.
And those variations can be surprisingly different.
Oh, no.
I know, right? Some states, they have their own separate gift taxes altogether.
Wow.
Others rely primarily on inheritance taxes. And then, on top of that, some states even have different exclusion limits than what the federal government sets.
Oh, my gosh. So many layers to this.
I know, it's a lot.
It seems like if you tried to navigate this on your own, it would be so easy to mess it up.
It definitely can be, and that's why.
Yeah, it sounds like trying to solve a puzzle where someone keeps swapping out the pieces.
You're telling me, right? And that is precisely why
Yeah.
having a really good financial advisor in your corner,
Right.
one who knows the ins and outs of your specific state's rules, that's absolutely crucial. They can help you cut through all that confusion. Make sure you're not accidentally, stepping on a tax landmine.
It's amazing how something that seems so simple at first, like, oh, I want to share some money with my family,
Right.
it turns out to be so incredibly complicated.
Yeah, you said it, and that's the thing about financial planning, right?
Right.
It's never really a one-size-fits-all kind of deal.
Right.
Every family's different.
Yeah.
Different dynamics, different goals. And let's not forget, different levels of risk tolerance, too.
Yeah, totally.
So what might work perfectly for one family might be a complete disaster for another.
Yeah, and that brings us back to what I think is like a really important message of this whole article.
Yeah.
You can't just rely on like general information you find online,
Right.
especially with something as important as gifting and estate planning, right?
Huge.
You really got to talk to the experts, get advice that's tailored to you.
Yeah. This article's great.
Yeah.
It's like a starting point.
Yeah.
It gets the wheels turning.
Yeah. Right. Exactly.
But you got to take it to the next level.
Yeah.
Work with someone who can really lay out a clear path forward for you.
It's like learning to play an instrument.
Right.
You can watch all the YouTube videos you want.
Yeah.
You can buy all the books, but to really get good at it,
Right.
you got to have a teacher. You got to have someone who can give you that one-on-one feedback.
Absolutely. I love that analogy. And in this case,
Yeah.
your financial goals,
Yeah.
your family, your risk tolerance,
Uh-huh.
those are the notes on your sheet music.
Okay.
Your advisor, they're like the conductor,
Gotcha.
helping you orchestrate everything so it all comes together
Love it.
into like a beautiful symphony of financial well-being.
So if our listeners take away just one thing from this whole conversation,
Yeah.
it's don't be afraid to reach out to the pros.
Yes.
Whether you're thinking about like a small gift or planning something really big,
For sure.
having an expert in your corner can make a world of difference.
Couldn't agree more. It's about empowering yourself, right? Arming yourself with information.
Yeah.
Making smart decisions that feel right for you and navigating all this stuff with confidence.
Well said. I think on that note, we've earned ourselves a little celebratory slice of cake
I'd say so.
for successfully navigating this whole labyrinth of gifting and taxes.
Absolutely. Until next time.
To our listeners, stay curious. Keep those financial wheels turning.
Yeah.
And remember, knowledge is power,
It really is.
especially when it comes to your financial future and the future of those you love.